it's me, Mara, at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday, so let's get started. I've got some new numbers for you about the housing market. We finished our year. I have 3 franchises. In 2020, I'm going to share with you their numbers. I've got a bird's eye view. People ask me, how long have you been in real estate? I've been in real estate over 30 years. And with running 3 different states, market centers, I know a little bit about numbers and about what's going on in the areas. And I wanted to share with you and a lot of it'll make sense when I give to you. I've got the states that are really doing well, and I want to just bring you some information. So today, I want to share with you my market center here in Denton, Texas. So I'll share with you what we did. So we finished out the year with $581,225,811. So that is an increase of 5.6%. Even during a pandemic, we had an increase. But wait, it gets better. My office in Columbus, Ohio, finished the year at $556,348,843. And that is an increase of 18.9%. We're in the middle of a pandemic, and we increased our business by 18.9% in sales of homes. But wait, it gets even better, which is even crazier. So I have an office in Northern Kentucky, on the other side of the river from Cincinnati in Florence, Kentucky. They did $635,043,064 in home sales. They are up 27.9%. You guys, that's incredible. So just so you know, I know a little bit about real estate. So all 3 of these offices did a little over 1.6 billion in real estate sales last year. So I think I know a little bit about real estate, and that's why I want to share a little bit about real estate with you so I can help you understand real estate. I've been doing this for over 30 years, and so I just want to share and keep it simple for you so you can kind of know, because maybe you're looking at buying investment property. Maybe you're looking at jumping into the real estate business, and listen, you get your best deal on the front end. When you buy real estate, doesn't matter, but if you will watch and buy it right, it doesn't matter when you sell it, you will sell it right. All right, so here we go. Nationwide inventory is down 40% compared to our all-time highs, which, right now, because of supply and demand, we don't have a lot of supply, so the demand has become so increased and the prices have become elevated. I want to share with you the 5 states that have the highest appreciation for homes. Number 1, Idaho is up 15.7%. This all came from CoreLogic. Number 2, Maine. Number 3, Indiana. I got a lot of friends in Indiana. Whoop, whoop. Number 3. Number 4, Montana. Number 5, Arizona. So they have had the highest home value appreciations. Of the 5 lowest states with the lowest home value appreciation, number 1, North Dakota. North Dakota is the very lowest of appreciation. It was 3.8%. So all states went up. They were the lowest at 3.8%. Number 2, New York. Number 3, Iowa. Number 4, DC. And number 5 is Louisiana. 5 from the bottom of home appreciation. So, when you see these kind of numbers, you kind of go, wow, that is pretty interesting, right? It's pretty interesting to know that that's what's going on. But there's more, and let me share that with you. So, let's talk about migration and what's happening in the real estate market and how people are moving away from cities. And they're moving to more suburban areas or rural areas and buying land and moving out the country. I've had several friends, because now they can work from home. That's become a whole new ball game, whereas before you had to come to the office. And now so many people are working from home. It's changed the game. So let's talk about that. So the United States Postal Service is a great resource to kind of tell you who's losing the most residents and who's gaining the most residents. So the 5 states that are losing the most people or have lost the most people, number 1 is Texas, which shocked me because we have so much happening and coming into Texas. If they've moved and they've reported it, of course, to the U.S. Postal Service, which most people do, then we have that record. And Texas lost the most residents. And Dallas lost the most in Texas. I'm 30 minutes outside of Dallas, and that's why those numbers are only up 5%. Makes sense. Number 2 is New York. New York this is the second that lost the most residents. Number 3 is D.C. Number 4 is North Carolina. And number 5 is Arizona. So, it's kind of surprising that these states are the ones. I was kind of surprised about North Carolina and about Arizona to be the ones that have lost the most residents. And, people are able to make decisions and work from home or work from exotic places now and get their work done. And companies now, it's become a new norm. We've got a lot of new norms. And one of them is staying home more. We all probably, I don't know about you, but I know I was gone all the time. And now I have found I love being home. So I've really changed the way I live and my lifestyle because of staying home. So anyway, I think there's a lot going on. Inventory. So because of all of this, the migration, unemployment, we've got so much supply and demand. Let's talk a little bit about inventory and what NAR, the National Association of Realtors, has to say. Inventory has been a struggle for a long time, and the problem has been compounded by the ongoing coronavirus pandemic. According to Realtor.com, December's housing report, the number of homes for sale recently reached an all-time low, hitting below 700,000 for the first time and dropping 39.6% year over year, almost 40%. That's 449,000 fewer homes for sale than last December. So you guys, especially if you're trying to buy a home, I know it's frustrating. Everything is multiple offers. Our inventory is less than 2 months. There are cities that the inventory is 30 days. And it's just, it's not anything we're used to. We're not used to a seller's market. We were in a buyer's market for so long, but we are in a seller's market. And hopefully with the vaccine and everything that's happening, we will be able to move forward and move to more of a stable market, a balanced market. That's a 4-month supply of inventory. We go into a buyer's market with a 6-month supply of inventory. And of course, anything below 4 kind of hits into more of a seller's market. The lower that number gets, the days on the market, the more, it becomes a big time seller's market. It's really, actually, I've never seen a market like this. And most of my friends that sell real estate feel the same way. We're all kind of like shaking our heads going, wow, it's crazy. So according to Realtor.com, the largest declines in listings, these are some of the cities that have the largest declines in listings: Nashville, Tennessee, Memphis, Tennessee, and Charlotte, North Carolina. They have the largest declines in new listings. New listed homes, however, are only down 0.8% year over year. A big improvement from November, we were down 8.7%. Regionally, for new listings, the western and northeastern markets are seeing the strongest improvements, with more listings hitting the market. So western market is up 30.8%, and then your northeastern market is up right now by 15%. So the Midwest and South regions are lagging behind. The Midwest is only up 0.2% currently, and South region is down 4%. So, the metros that had the largest price gain, Austin, Texas, price gain is up 20%. So they may be moving out, but the ones coming in are paying more. Riverside, San Bernardino, California is up 17.2%. And New Orleans is up 16.8. All right, regionally, the Northeast leads in home price growth at 12.2%, followed by the West, 10.4%, the Midwest, 8.6%, and the South at 6.7%. The holiday season sped things up a bit, with homes selling in 66 days on average in December, 13 days faster year over year. And in the nation's 50 largest metros, days on the market were even faster than 56 days. The metros that had the fastest days on the market: Virginia Beach, Virginia, 28 days. Hartford, Connecticut, 23 days. Whoop, whoop, Louisville, Kentucky. And it's Louisville, Kentucky. Kind of like that New Orleans, Nolans. I think is how they say it. I'll figure it out. 23 days in Louisville, Kentucky. Woo! I love it. If you're buying real estate in Louisville, Kentucky, man, you're up. Market has the fastest days on the market, 23 days in Louisville, Kentucky. Wow. Some of y'all say Louisville. I'm going to just tell you, it takes a Kentucky girl to tell you it's Louisville. And I'll just leave it at that. All right. So I hope that was good information. I just want you to understand that, between unemployment, which a normal unemployment for us, like in 2019, unemployment was around the 3.5. Pre-pandemic, unemployment's 3.5. We're still holding right now at 6.7. So we've got foreclosures coming. There's a lot going on in the real estate market, and we'll know more as we get closer to the spring market. Remember, people are feeling better with the vaccine. People are feeling better. Although we have more cases every day, people are feeling better about the prospect of getting back to normal, whatever our new normal is. But I just want you to know that I feel like that probably the foreclosures will hit, because right now we got 3.5 million behind on their homes. And actually the numbers are really bigger than that. That's what is actually, it's 3,557,000 homes that are 30 or more days past due that are or in foreclosure. And that's a big number. And we'll see what happens. And more people, hopefully, with the spring. That's always when is our best market. And with the spring coming, hopefully more people will be ready to put their house on the market, be ready to list their houses, and we can move forward, because I think we're all ready to move forward. And I know a lot of buyers that, my goodness, that they put in 3 and 4 and 5 offers and keep losing houses because they're going 25, 50, and 75,000 over asking. It's crazy. And hopefully we'll be able to get the market a little more balanced. But I'm going to tell you, if you're wanting to sell your house, you need to get that house on the market. I'm just telling you right now, you want to make the most money for your house. You'll make more money if you list in the first 2 quarters of the year than you're going to make in the second 2 quarters of the year, because foreclosures will start coming on board and some things will start changing. Because, with the pandemic and our unemployment, some things are inevitable. So love you guys. It's great being with you. Don't forget to subscribe. Give me a thumbs up. Remember, it's not how much money you make. It's how much money you keep and what you do with it. And are you buying assets with your money? That's what we teach here at Down Home Money. We're about real estate, money, and life. And we're going to show you how you can buy dividends and build a passive income, real estate, how you can get in the real estate business, buy you some rental property. We're going to share with you ways to make money so that you can have freedom of time. We'll see you later.